Good morning, everyone. My name is Oliver Worth, and this morning I'm accompanied by Adam Coffey. It's our pleasure this morning to speak to you with our regards in terms of sustainability and corporate social responsibility. This morning we are with Lenoir Rhyne University, located in Hickory, North Carolina. And again, we'd just like to reiterate our great pleasure and appreciation in the availability we've been able to speak this morning. Thank you again. In addition to that, before I do start, if anybody wants me to slow down, if they don't understand my accent, you can obviously raise your hand and ask me to repeat. If not, other than that, I'll have to send you an email or a text message or something like that, so we can obviously conflict and understand each other a little better. So to begin, the economic recovery in terms of what occurred in 2009 and the way in which businesses today, corporations today, are having to reduce costs because of the non-renewable resources and the resources that were available before 2009 that we could say were cheaper, which obviously enable profits to grow and spiral forward from there. Businesses today are having to reduce costs, they're having to cut costs in order to remain sustainable and successful in the business world. Non-renewable resources are actually obviously increasing in cost as well, which obviously affects the bottom line of any business. So in order to, as we said, remain successful, companies today, businesses today are having to evaluate their bottom line. They're having to evaluate what they're doing in terms of services provided, products provided, like we said, to be successful. In addition to that, the government is regulating business activity a lot more freely, a lot more openly. And as a result, businesses are having to transform their business model, their business goals, what they intend to do, what they intend to achieve. Sustainability. Now, we didn't want to stand up here and reiterate definitions of sustainability and an online definition, for example. So we decided to bring our own scope, our own scape on this subject and share with you this morning our values, our beliefs of sustainability, what it is, what it offers to a business, to a corporation, and how it can be effective. Sustainability is actually a voluntary activity. There is no regulation in terms of you must do this, you must do that, with respect to certain legislation, certain rules, certain laws. In addition to that, the triple bottom line is often branched, is often associated with sustainability. We're going to go into the triple bottom line in a lot more detail further on in the presentation. Just to touch on it briefly, the triple bottom line, what I mean by that is the economic, the social and environmental risks associated with carrying out business activities. In addition to that, carrying out sustainability, being sustainable, being socially responsible, it creates a positive corporate image, whether that's within a company, whether that's outside, external of a company, the stakeholders involved for a company. In addition to that, a corporate image could even be with someone that, has no relevance, has no association with a company, with a business. So a corporate image is obviously pivotal to any successful corporation. In addition to that, as we said earlier, as we touched on after the recession and after the budget cuts, the way businesses are having to restructure and reframe frameworks and accounts, that again is very important for any business strategy to be able to be flexible, to be able to change, to be open to change in order to, like we said, be successful. Corporate social responsibility. Again, like we said, we don't want to rally definitions off to you this morning. So corporate social responsibility, as far as we're concerned, is the management of business processes. In addition to that, carrying out these business processes produces a positive effect on society. How does carrying out a certain service, how does that affect society today? How does producing a certain product in terms of manufacturing, how does that affect society? In addition to that, local and global stakeholder opinions. So like I've just touched on, how do individuals outside the corporation see our corporate or see our business? Do they see, anybody can say, we are a green company, we are a green corporation. And if I'm honest, when I was first given this, this topic, this area to discuss, I said, this area is not for me. I'm a guy that likes numbers, likes statistics, and until I did the research and until Dr. King told me to, evaluate in depth, I never knew the depth in which sustainability and social responsibility goes into. And it incorporates everything from numbers, accounting, to internal, extrinsic values to a corporation, to a business, and it's a fantastic subject area. In addition to that, individual and organisational leaders play a pivotal role in the sustainability and social responsibility of any corporation. How they see their business, how they set or implement certain business structures, business goals to their employees, how they carry themselves. That is always going to be important to lead from the front. In addition to that, the ethics, corporate citizenship and performance of any corporation is always related to its sustainability and corporate responsibility. Especially using an example from back home. Obviously I get to travel back home probably once or twice a year. The number of businesses that I have seen with boards on the doors, that have now closed due to the recession, it's unbelievable. And obviously the only companies that have survived are the companies that did implement sustainability and social responsibility from an early point of their business perspectives. So we touched on the triple bottom line, and this is more associated to me with sustainability. And we believe that the triple bottom line is the essence of sustainability. It can also be referred to as the 3 Ps, which you are all probably aware of. The profits, obviously with regards to financials, to the economics, the planet in terms of environmental aspects, and people, the social aspects. It's measuring financial, social, environmental performance. So what we're trying to say of this, it's evaluating the overall cost of actually doing business. So, okay, we've sold this product. How did that affect us in terms of revenue? Okay, fantastic. We can record that on the income statement. But in producing this product, in manufacturing this product, how has it affected the environment? Who produced this product? Okay, there's the cost. This is what it costs to produce this product. But how has that affected the company in terms of its assets, in terms of employees? How has that affected the environment in producing this product? And so on. Unfortunately, the triple bottom line, I say unfortunately, it's so flexible in terms of any business can choose to evaluate the triple bottom line in any way it wants. You can choose to focus on the environment if you would like. However, again, me from a finance background and just believing in numbers to obviously show how a business is performing, the environment, if it is not affecting your business or if it's not affecting your long-term goals, if you're putting numbers and you're putting revenues and your revenues are spiraling, they're increasing, what else matters? Now, obviously, that was a very ignorant view to first have before I evaluated the topics of sustainability and corporate social responsibility. And like I said, it's so much more in terms of the future and future success. And like we've said there, the finite bullet, it's imperative. It really is imperative for corporation growth. So going into the triple bottom line and in a bit more detail, the first account, profit account. Profit account deals with the economic activity. So like we said, prosperity, the financial situation, how a company stands is imperative. It deals with revenues, expenses, looking at the income statement, the dividends, the share price of a company. In addition to that, the size of the establishment, employment distribution by sector, gross state product contribution in terms of how much it's contributing in terms of employment, how much revenue it's contributing to the state product. The second account, the people account, obviously looking at the aspects of social responsibility. We believe that this is more internal and external. In terms of internal, obviously the employees, to me, is the driver of any successful corporation today. It's the nucleus of any corporation's success. In addition to that, externally, we're looking at stakeholders. We're looking at individuals in terms of vendors, individuals that may be affected on the supply chain. Again, external individuals, any form of marketing. Word of mouth is a fantastic marketing tool. Individuals in the business world are always talking, yep, I received this service, I received this product from company X. Okay, word of mouth, it passes on from there. So the people account, to me, is the most important account, but obviously we have to weigh each individual account with the same amount of scope as in terms of looking at it and planning the future from there. Again, a few examples to just reiterate the fact of social responsibility: average hours training employees, charitable contributions in terms of giving something back, welfare to career retention. Obviously, when a recession hits, like we touched on in the introduction, the first belief of some individuals or some leaders is to, cut costs. Let's get rid of certain employees. Let's rebuild. Let's pay lower compensating packages. Let's rebuild from there. However, how does that affect a company? Is that being sustainable? To me, it's not. And finally, the health-adjusted life expectancy of employees that are working for corporations, carrying out certain activities, certain services, manufacturing certain products that do have health benefits or do have health effects. And finally, the environmental responsibility. In terms of the words are always thrown about when you hear sustainability and social responsibility of going green. How does that affect the environment? And like I said earlier, to me, the environment was, I didn't really pay much attention to the environment. But when you look at it, and in terms of numbers and looking at the financial aspect of it, the planet, the final P, or the planet account is crucial to the success or the future success of corporations today. It looks at things like the safety incident rate, sales dollar per kilowatt hour, greenhouse gas emission, water, fossil fuel and electricity consumption, hazardous and solid waste management. Adam's going to touch on this briefly after I've obviously discussed this. However, we feel it's important to give examples, concrete examples of how corporations or how individual businesses are carrying out what we've discussed this morning in terms of how it's reducing costs, how it's giving back, how it's managing its prosperity, its financial aspects of the corporation or its business, how it's paying back to the environment, how it's controlling the effects of what it does, affects the environment, like I said. And the main driver to me of any corporation, any successful business, the social aspects in terms of its employees and the stakeholders affected.
Like Oliver said, we wanted to show an example of social responsibility and sustainability within a company, and we decided to look at the intrinsic values that are gained from the company Intertek. Intertek is a global company. They are a leading company that provides quality and safety services for their clients. The history can be traced back over 128 years with multiple businesses, and ultimately formed the company today. I think around 2002 is when they became introduced on the stock market. They have over 35,000 employees, over 1,000 locations, and within 100 companies worldwide, countries worldwide. And like I said, they assist other businesses to become more globally sustainable and socially responsible by actually testing the products that the companies create to make sure safety and standards, environmental standards, and social accountability standards are met. In 2012, Intertek's revenues actually grew 17% from 2011 to over £2 billion, and grew its profits 19% to 335 million pounds. And one of Intertek's goals is to assist the other businesses to become more globally sustainable and socially responsible. So they don't just practice it, they market to other companies to do the same. An example of what they do, or several examples rather, is annual ethical sourcing forums that they hold. They hold these with their own suppliers and retailers that they work with, and they also, to try to work together to achieve measurable goals. To try to be more sustainable, try to figure out how their supply chains can be more effective, be more globally responsible. And also they work on with CO2 emission reduction. Intertek's company actually, they employ people to reduce their CO2 emissions, and so their own CO2 emissions have actually reduced by 2% over from the comparison from last year, actually, across 20 companies worldwide. They calculate the environmental footprint of its customers also. So they'll go in and evaluate their processes, evaluate everything, and actually calculate their environmental footprint so that the company can make sure that they're more sustainable. They also do verification services, and this is mainly what they actually do. They evaluate the customer's quality, safety, performance of its products, and as well as the social and environmental impacts of their products. And it goes all the way down to the disposal of those products. Intertek has actually increased their employees, and this goes to the people portion of the triple bottom line. They feel that more people that are being hired and more people that are working actually helps out the social structure as a whole. And that's why they now employ over 35,000 people. They do design and sourcing advice to companies to encourage and ensure environmental social responsibility. They do the sourcing and design, and they actually and even the conception of disposal of the products. And they also do the worksite condition assessment. So they help out companies to try to make sure that the facilities that they are working in are environmentally friendly, safe for the actual employees themselves, so they're not getting injured. And this goes to an industry such as OSHA compliancy. They also work with water life cycle. With increasing water scarcity of the planet, the company actually tries to look at ways to provide more drinking water for areas also. And also with the European Bathing Water Directive, they work with the Yorkshire Water Company to protect public health through monitoring the quality of the seawater actually on Europeans' coastline. They also work with the local community engagement. They support all of their communities that they work in, and such as supporting local schools through demonstrating of employee skills. They donate to charities in South Africa to support disadvantaged children. In Argentina, they provided support to blind and deaf people, and particularly the disabled children. They donated a free lunch fund, actually providing 30,000 deprived children in China with food. And they also provided sustainable drinking water for the whole city of Manila in the Philippines. And as an example of their competitors, SGS is also a global leader. They also do marketing with sustainability, also marketing with global social responsibility, and they are, like I said, a leader in this industry as well. On the flip side, National Technical Systems Incorporated, they are not a global leader. They are a lot smaller company, and they do not market to the social responsibility or sustainability within the organization.
Thanks, Adam. So looking at the intrinsic values added, and what we mean by saying the intrinsic values added is by being sustainable, by being socially responsible, how does that affect your business internally, the intrinsic values that you get from that? So we begin with the qualitative factors. Again, relating qualitative to quantitative, me being a numbers kind of guy. The descriptions in terms of qualitative indicators, we're looking at the employee views. Any corporation that has employees that are not happy, that are not motivated to work, that don't want to work for their employer, that see, you're always going to get certain employees that complain. We all understand that. However, how is your business built in terms of the employer brand? How is your biggest asset, your employees? How do they see your corporation? Do they want to work for the corporation? Are they motivated? And that will always drive success for any successful corporation. In addition to that, like we said, the intrinsic rewards gained by working for, we'll use Intertek as an example, by working for Intertek, okay, everyone's always looking at the compensation package, they're always looking at the benefits. But do you go to work every day feeling like you're happy, you want to be there, you're motivated to work for the company? That, to me, any successful corporation, any successful business has that as an asset, and that is hard to do. In addition to that, the internal groups that are built in terms of relationships, obviously there's different sectors, there's different aspects that certain individuals or certain employees look at for a business. However, how are them relationships, how are they built, how are they put together in terms of driving and growing the company? So the opposite to that, the extrinsic values added. How are stakeholders' perceptions of a company? Like we said, touching on the marketing aspects of word of mouth. How do individuals involved on the supply chain, the vendors, just as an example, what are their beliefs, what are their policies of certain companies? How are you seen in the business world? In addition to that, the extrinsic values and how you hold yourself in terms of being sustainable and socially responsible. This is what makes your commercial brand. This is what defines your commercial brand. In terms of that, the social constructions, what we're saying by this is, okay, you don't have to be sustainable, you don't have to be socially responsible, but like Adam said, using the examples of giving back and feeding young children that are obviously unfortunate than we are, giving something back, obviously that's going to affect your organisation. It's not going to increase the revenue on the income statement. It's not going to increase the assets on the balance sheet. However, what it is going to do, it's going to create an image to individuals external to the organisation to say, fantastic, they're giving back. They're giving something back to the community, whether it's in the Philippines, whether it's in Hickory, North Carolina, whether it's in Salt Lake City. They're actually giving something back, which is always fantastic. And again, on the flip side of that, if companies are not giving back, if companies are selfish, if that's the word to use, in terms of it's all about revenues, cutting costs, removing employees that are earning higher end compensation packages. However, they are bringing excellent resources to the company or to the business. That could actually affect or, it could harm an organisation in the future. The accounting dimensions of sustainability. So again, being from a financial background, I wanted to try and incorporate this in terms of accounting and in terms of how do we record the sustainable efforts we are participating in. How do we record the social responsibility that we are participating in? And after research, it's actually become common known that there is not actually one comprehensive methodology, in terms of recording on the income statement, on the balance sheet, in terms of how your costs flow in and out. And it is an area for fertile experimentation. So corporations worldwide on a global stage are experimenting with ways to implement this into their financial statements, into their sustainable accounting statements. So that's what we're trying to touch on here. And what we've said by that is it's difficult to measure the triple bottom line, which we discussed earlier. Okay, like we said, we can record revenues, we can record how we reduce costs, but how do you record human and intellectual capital of your employees, of your main driver? In addition to that, if we get extended monetized information, so if we are able to measure social, or when I say social, if we're able to measure intellectual capital, if we're able to measure the actual costs of producing certain products or carrying out certain services, this is going to make us, in terms of, relating back to potential investors or stakeholders of our corporation, it's going to make us more, strong in terms of this is what we're doing, this is how it's recorded, this is what we're giving back, and it's going to really assert the position of a corporation. And we finish off there, like we just said, in terms of communicating more effectively. So yes, we produce this product, this is how much it cost, this is what the effect was to the environment, this was in terms of assets, the intellectual capital of our employee that produced this product, this is recorded here. So there's certain different ways you can look at it. So looking at a financial aspect, like we've been discussing in terms of the income statement and the balance sheet, I wanted to tie this to a sustainable accounting method. And if we are able to define, or if we're able to come up with a sustainable accounting method, it's going to take a lot of adjustment and extension of the existing financial statements. The profit and loss account, like I said, so we're talking about the income statement. Yes, we can record revenues, but in terms of loss, can we record the loss of the actual cost to the planet, to the environment? Can we record the cost to our employees for, continuing work to produce these products or services? In addition to that, the extension of the balance sheet, we're talking about assets. So our employees, how do we record them as an asset? Okay, yeah, we can record goodwill, and maybe goodwill puts a corporation at a higher value than what you should actually pay for it. But that's goodwill. You look at corporations like McDonald's, fantastic goodwill, fantastic name, a brand, an image that individuals see. And this is why their goodwill is so high. In addition to that, we could provide shadow accounts. So like we said, touching on the triple bottom line in terms of the profits, the people and the planet, we could provide shadow accounts to individualize for these individual accounts. And ultimately, this will give greater decisions made. In addition to that, we could choose to weight the three accounts in terms of profit, people and planet in terms of an index. And okay, it's going to increase or improve managerial decisions, but how would you weight each individual P account, should we say? I don't know, should it be 40% in terms of people? Should it be 50% in terms of the planet? To me, they should all be equal after extensive research. But to certain individuals, or should we say corporation leaders, the planet may only be 10%. So again, this is different for different sectors or different services provided or products provided in terms of the effects on a planet. A consulting firm is not going to really affect the planet other than the way it drives to see its clients or its customers. However, a company making something like the projector here, how is that affecting the planet? So it's different in terms of how companies really affect the planet or the P account. But if we do come to a universal accounting method, whether it's within sustainable accounting, whether it's extending the income statement and the balance sheet, or whether it's weighting each through an index, this is going to give companies the ability to compare, and it's going to give external individuals the ability to compare and show how corporations are being sustainable and how corporations are being socially responsible. So in conclusion, assets and costs in some way are not accounted for. Like we've talked about the goodwill. Okay, yep, the greater price and the actual value of the corporation, like we talked about McDonald's, fantastic. However, the employees, which is the nucleus of any corporation, like we said, the driver, like I keep going back to the point of any successful corporation, how are the employees, how are their intellectual capital recorded on the balance sheet? Surely your employees are assets. How are individual employees recorded on the balance sheet? I use an example from Intertek after a conference call with someone I had from Intertek. And like Adam touched on in terms of testing, Intertek, a quality solution firm, obviously testing the grades of oil. And a certain employee actually found a way to test this oil in 2 days from 2 weeks. Now, you can think in terms of revenue, in terms of what the customers, what the supply chain thought of this. This was fantastic. If we can send Intertek our oil and we can get that back within 2 or 3 days in terms of, with respect to in terms of 2 weeks, how fantastic is that? And this was not a company that's gone by the book, you must do this, 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 and this. And by actually doing that, by actually this employee, reducing the time from 2 weeks to 2 days, this increased Intertek's revenue ginormously. Now, obviously, Intertek recorded this on the income statement. Revenue's gone up here, fantastic. But where is the intellectual capital recorded? Surely this is an asset. Surely this should be recorded on the balance sheet as an asset. And for potential investors, they should be seeing greater assets. On the flip side of that, the overall cost of producing revenue, the environmental damage, and obviously which is increasing costs, is not recorded on the income statement. In addition to that, the costs incurred on the planet, they're not recognized. So, okay, we've produced this. This was the materials. This was the resources we used to produce this. Okay, but that's not the full cost of producing that product. That's not the full cost of carrying out that service. What about the effects on the environment? What about the effects on the people? Where is that recorded on the income statement? The income statement is measuring costs. So if we go with that flow, if we go with that idea, surely goods and services are undervalued. If costs increase, obviously your margin in terms of your profit, what you're selling your product for, what you're selling your service for, your profits are going to decrease. So in terms of goods and services provided, if we're not recording the costs or the effects on the planet on the income statement, surely products and services are undervalued. In addition to that, our corporations undercharging. If costs are increased, like we said, your price, your end price to the consumer is going to increase. So our corporations, our businesses undercharging. So tying it all together and to avoid government regulation, which I believe is going to have to come to the front sooner or later. If not, we're going to exhaust natural resources. And I use this as an example of, I say, immediate action and to risk becoming commercially stagnant. It is a collective effort. If one business chooses to record the cost to the environment on their income statement and as such chooses to increase their price, then how is that going to affect competition? If a competitor doesn't choose to record the effects or the cost to the environment and they can remain with a lower price, human nature is going to buy, I'll give you an example. If I can produce you a BMW at $40,000 or I can produce you a BMW at $75,000, but I'm being sustainable and I'm recording my costs, the consumer's going to buy the same car for, $35,000 cheaper. So that's the human nature, unfortunately. That's the society we live in. And I believe that if it's not a collective effort, which it won't be, on their own, businesses are not going to say, yes, we'll all record this on the financial statement, on the income statement. Yes, we'll record our assets on the balance sheet. Then it's going to have to be regulated more by the government. There's going to have to be certain rules. There's going to have to be legislation behind it in terms of you must record this, you must record that. And overall, it's going to affect consumers. It's going to affect the bottom line. It's going to affect competition. If prices are increasing because of the effects and the costs of the planet, how is this going to affect consumers? So, in addition to the conclusion, I think the main point we want to hit home with today is the employees, the social capital of any successful corporation are the main driver today. In terms of that, if corporations are not being sustainable, if they're not putting into place today goals, directives, beliefs, passions to be sustainable and to be successful in the future, it's not going to happen without doing that. So again, I would like to thank you for this opportunity this morning. It's of our great pleasure speaking from Adam and myself's point of view, and we'd like to open the floor up for any questions.
I'm also an accountant, and I understand these numbers very well.
Okay.
Is the American Institute of CPAs
Yep.
doing anything to move toward recording these environmental or social expenses on the income statement, or recording the intrinsic value of employees on the balance sheet?
Actually, going from the ideas that obviously I've brought up this morning in terms of extending the income statement, extending the balance sheet, they're actually looking into ways, to do that. And again, using the example of the weighted index, that's another example they looked into doing. However, as we can all understand, it's, from an accounting background like myself, it's hard to record an intellectual capital of an individual or the motivation of an individual. How can I put on you, a number in terms of how motivated you are? So it is understandable why there is no framework, why there is no, set foundations, set rules. But I think something is going to have to change in terms of recording every single asset, every single cost. But back to your question in terms of what are they doing? From my research, the two examples that I use, that's all I've seen. I know, companies, corporations, states, countries are all going towards, is it GAPP, if I'm not mistaken? GAP
The GAP is the American standards, but the IFRS
is the European.
Is the international.
Okay. Well, the GAPP is moving towards the international standards more. Obviously, it's trying to propel itself more to the international standards so it can be more closely related. That's what I got from my research. But in addition to that, I honestly don't know. Thank you.
You two gentlemen may want to share with them how this is not just a project to present here, but you both are going to have careers that are affected by this type of research. Adam?
Yes, actually with this research, Intertek does the, work to try to evaluate OSHA standards. And I work with a small company in Hickory that does OSHA evaluations, OSHA testing, and consultations. We go into companies and do policy presentations and everything to help a company be more OSHA compliant. Now that ties into the social responsibility, because a person, for example, in a construction site, for instance, at Lenoir Rhyne, they're building a chapel right now. If someone is up in what they call a man lift, this is a big piece of machinery that weighs several tons, and they can be up towards 50 feet in the air with this man lift. If someone falls from the ground, they're going to die. So OSHA standards basically says that you have to be tied off in a harness. You have to have certain PPE is what it's called, personal protective equipment, to be in that basket while you're up in the air. This goes towards the social responsibility, because that person's life is in danger with their work, and therefore they need to be protected, and therefore the processes need to be in place in a business so that that person is protected.
From a personal point of view, I'm looking at potential employment in August with Intertek, and after discussions with certain employees from Intertek, they want me to basically go in at a low level, obviously using the MBA and using my undergrad degree, and they're actually using this as a pilot scheme. It's the first time they've ever done it. And what they want me to do is they want me to go into a lower level to be like an operations analyst in terms of looking at what's going off at lower levels, because obviously the higher end individuals, if you like, they've not got time to go and see what's going off at the lower levels, and they understand that there's certain elements, there's certain ideas that can be changed in terms of their sustainable growth, in terms of their success. So it's a fantastic opportunity to be able to be the individual on the pilot scheme, learn the business from the bottom, and attempt to work up from there. I think it would be easy just to go into a job and walk into an office and get everything, and you don't know how a business works. Intertek, so they've got 5 or 6 different sectors, and I think it's a commodities section they're looking at putting me into. So you'll be going in at a lower level, learning the business from there, and then working up from there, giving ideas how to change, using the aspects of the MBA to basically give feedback to the higher level. But and that is an example of a company being sustainable. They want employees to learn the business and in terms of being socially responsible. They want them to learn the business, give something back, and spiral and project the company forward from there.